But Ghana's economy grew at the slowest pace in 2 years in the third quarter of 2022, according to data from the Ghana Statistical Service. Now, the economy expanded by 2.9% in the third quarter of 2022. This is lower than the 4.7% gross domestic product recorded in the second quarter of this year. The slowdown in growth impacted heavily on the overall growth rate. Agriculture, however, recorded the highest GDP of 4.6%, whilst the services sector registered a growth rate of 3.9%. Here's government statistician Professor Samuel Kobneni.
We turn to the provisional figures from a constant point of view, looking at it from an oil and a non-oil perspective. From an oil perspective, constant terms, GDP for the third quarter of 2022 stood at 44,289.7 million Ghana cedis relative to 43,025.3 million Ghana cedis for the same period, 2021 third quarter. This accounts for about a 1 billion Ghana cedis between these two periods, that is third quarter of 2022 and third quarter of 2021. From a non-oil perspective, we recorded for the third quarter of 2022 41,586.5 million Ghana cedis relative to 40,156.7 million Ghana cedis for the same period, third quarter 2021, indicating about a 1.4 billion Ghana cedis between these two periods. Based on the constant rate, we estimate the growth rate in real terms. The growth rate between the third quarter of 2021 and the third quarter of 2022 stood at 2.9% relative to 6.5% that was recorded for the period third quarter 2020 relative to third quarter 2021. So we're recording a decline from 6.5% between third quarter 2020 and third quarter 2021 to 2.9% for the period third quarter 2021 and third quarter 2022. From a non-oil perspective, we recorded a growth rate of 3.6% for the period third quarter 2022, referencing third quarter 2021. This shows a sharp decline for the rate that was recorded for the third quarter of 2021, which stood at 8.2 growth rate between third quarter 2020 and third quarter 2021, and for the third quarter 2022, it declined to 3.6%.
Joining us on Zoom is Director of the Institute of Statistical, Social and Economic Research, Professor Peter Quartey. Grateful you could join us. Prof, expansion of 2.9%, that is quite a disappointing number following the gains made in second quarter. What accounted for this, do you think?
Well, I think, first of all, good afternoon to you and to your discerning listeners and viewers. I think this is expected in the sense that we saw what happened between June and to November, December thereabout. We've seen rise or increasing cost of production because of increases in fuel prices, transport fares went up, wages. Of course, workers also asked for higher wages. So cost of production basically went up. Then you also find that people's real incomes have gone down, and therefore purchasing power goes down as well. So all of this, what is happening, basically happening within the economy from June to November, did not actually spur production. Did not provide the enabling environment for production or productive activities to flourish, and therefore this translated into lower growth figures, and it's quite lower than what you saw in the third quarter of 2021. Normally, growth picks up. Third and fourth quarter is where you see higher growth numbers, but disappointingly, this time around we saw a decline in the growth numbers, 2.9%. But it's much expected as we saw the happenings within the economy during the period.
Well, we're yet to see what the fourth quarter will look like, but what are the implications of this? And how do we improve on the slow growth of 0.9% recorded by industry, especially as the latest PPI figures showed industry recorded the highest inflation of 94.3%?
Yes, I mean, this is reflecting in the producer price inflation as well. It's gone up. But how do we get out of this? The exchange rate is a major factor. If we are able to stabilize the exchange rate, that can also translate into lower fuel costs, lower energy costs, lower cost of production. Workers will not ask for higher wages if we're able to stabilize inflation. Inflation currently is about 50% thereabout. So unless we're able to ensure macro stability, ensure that some of the macro indicators are stable, this is likely to occur. So let's work on the exchange rate again and ensure that it's relatively stable compared to where we saw between June and September and October.
Well, there was some level of excitement when the cedi made some gains over the past 2 weeks against major trading currencies. We are seeing the cedi lose those gains in the last couple of days. I'm not too sure if we are going to see a stable cedi going into the next year. How does that affect economic growth going forward?
Well, once, as I mentioned, once the exchange rate depreciates, starts fluctuating, then it affects planning, it affects cost of imports, it affects cost of production. So going forward, I mean the news about debt restructuring, I mean external debt restructuring and all that, is investors feed on some of this information and react. There's been a lot of speculative activities. That is why the cedi tumbled so quickly. The dollar tumbled so quickly when the IMF, was announced, despite the other policies that have been pursued by the Bank of Ghana and the government. But I think there is a lot of speculative activities as well. So if we have a stable environment, stable outlook, people think that going into 2021, we'll be able to sign on to an IMF program and get more inflows, and that we're going to ensure macro stability, etc. Then we're likely to see a stable exchange rate regime, and the cedi will not depreciate as quickly as it did in the months of September to November.
Well, what's of interest has to do with the agri sector, recording the highest GDP of 4.6%. I've spoken to you about this, and you've always called for massive investment in the agri sector. I'm wondering what the government did differently this time around for us to see this level of growth.
I think agri has been resilient, even in the era of COVID, and we'll give some credit to the planting for food and jobs as well. But agriculture has been very resilient, and luckily for us, we rely so much on rain-fed agriculture. We've seen the rains come in very good proportions, and therefore it's not surprising that agri is performing better. Yes, there is a call for massive investment in agriculture. We are not doing well when it comes to irrigation. We are not doing so well when it comes to supporting the value chain, storage, processing. And I think that's where our focus should be, because once we're able to stabilize food prices, ensure adequate supply of food, and we'll be able to fight inflation to a large extent.
Yeah, and makes you wonder, even if we are able to produce some more and industries which rely on to process are struggling, then it becomes a problem, Prof.
Oh, certainly. But once we satisfy our basic food needs, it is good. But we need to go a step further, ensure that industry grows. We've seen manufacturing growing negative 7.something%. We've seen construction, declining. Manufacturing declining. We've seen construction also declining. It's not good. Manufacturing and agriculture are the major employers of our labor force. So if any of these two sectors are going down, it tells you the implications on employment, it tells you the implications on incomes, livelihood, and it can even create social tension when there's a large group of youth that are unemployed, and we need to work seriously at this.
My last question to you has got to do with the IMF program. You brought it up and how it is critical as we work towards economic recovery. I just want your thoughts, because I haven't asked you this on our show, on how these issues of debt restructuring are being handled, the pushback we've seen over time, the announcements being made by government, how it's going about it. What are your thoughts on how it's going so far?
Yes, we have reached a point where it's inevitable. Debt restructuring is one of the requirements we need to do to sign on to the program. However, consensus building in every economic policy is very important. You do not impose policies on people. You have to engage them, get them to understand before you roll it out. And I don't think we have done very well with that. There's been quite a number of consultations, but I thought we could have come a bit early. And I also think that it's still not too late. There has to be dialogue, there has to be consensus building, there has to be a lot of consultation. I think that perhaps the zero coupon rate on bonds for 2023 might affect a lot of businesses, including the financial sector. Maybe some 5% or something that will help pushing these institutions, including the pension fund holders. That the discussion should look at the numbers and see what can be offered in terms of the coupon rate. I think that is where the problem is. If financial institutions are taking deposits, fixed deposits or deposits at, let's say, 20 or 15%, you are asking them to forfeit their interest rate when they rely so much on interest income. It becomes a problem. So I would urge government to engage the unions and offer something, but the 0% might be problematic, in my view.
I need to ask you this. Do you think that we're going to see a slight improvement in this fourth quarter? What's your outlook going into next year as far as growth of our economy is concerned?
Normally, the last quarter, we see all things being equal, as the economists will say, we see higher growth numbers. However, if we do not witness the kind of turbulence we saw between June and September, then we are likely to see something higher than the 2.9%. So if the current exchange rate we are seeing remains fairly stable, if the prices come down, I mean, we've seen prices on the pumps coming down, we've seen oil prices going down, granted that nothing untoward happened, nothing unforeseen happened, then we are likely to see some positive numbers, higher than the 2.9%.
Professor Peter Korte, Director of ISA, appreciate your time, and Merry Christmas in advance if we don't get to speak before then.
Happy returns.
Thank you so much. Well, the Ghana cedi has returned to its depreciation trajectory 2 days after government announced a suspension of interest payment to some of its external creditors. Right after the announcement of a domestic action program by government, the cedi strengthened in value consistently for 2 weeks against the US dollar. However, the local currency, according to Joy Business's checks and some forex bureaus, is going for 12 cedis, 20 pesos to the US dollar on the forex market. Same could be said about the cedi's performance against other major foreign currencies. If the trend continues, the recent gains, which have led to a reduction in prices of petroleum products and other goods on the market, will be reversed. Well, joining us on Zoom to discuss this, senior finance lecturer at the University of Cape Coast Business School, Daryl Kwawu. Thank you so much for your time. So, domestic debt exchange announcement, cedi goes up, external debt restructuring announcement, cedi begins to fall. Explain to us what is going on here.
Okay, thank you very much, Daryl. The market basically responds to information, and the information on the foreign debt exchange gives our investors the notion that it's going to be very hard to pay their debts when they fall due. Eventually, we've been downgraded by S&P to a selective default rate, which means that these foreign investors who one way or the other trade in the cedi will not have much confidence in the amount that they bring into the country for trading. And hence, we see this particular response on the market of the cedi. There is fears that if I bring more dollars to trade with the country, I might lose more because the one that I have with the country, they are not able to pay me as we speak because they have announced a debt servicing kind of thing that is a default. And for that matter, it becomes very difficult to trade with the country, especially when this thing came as a shock to some of them when they have not been consulted. The consensus building has not been that much. This is the kind of response that we get from the market.
And it gives credence to analysts' submissions that this probably was artificial. Doesn't this give that
There are several factors that play a role when we're managing the currency. Government, one way or the other, had restricted the trading of the currencies to the forex bureaus, trying to eliminate the black market, which was not totally done. They've actually restricted the supply of the dollars to essential services and all those things. But the domestic production has not been, we've not even started producing domestically to export. And for that matter, the market will play out like this. It will rise and come, but with time, if the IMF deal comes on board and the external creditors accept the debt servicing suspension, the domestic creditors accept the debt exchange, we will see an appreciation of the cedi and situation will become normalized. Well,
the president over the last weekend mentioned the Bank of Ghana was going to purchase some more dollars from mining and oil and gas companies. I don't know if that transaction has taken place, but would that make any difference?
That will be the same issue. The only thing is that the gold is not the store of value for us. We can use it as a store of value, but it's not a medium of exchange that we are going to use all the time to do our businesses. And for that matter, we're still going to see this particular situation happening for some time, except that we have to make sure that we do not allow anybody to trade in the dollar. If you want to trade in the dollar, you go to the right entities to trade in the dollar, and those who are in essential services are the ones who are supposed to supply, and that will be okay.
So in other news, S&P is the latest credit rating agency to downgrade us to junk status, but this was expected, wasn't it? And does it make any significant impact? We have announced we are delaying on payment of interest on some of our external debts anyway.
Yeah, so for this very one, it's just a normal thing that has happened because it is not a news to us. We are expecting these downgrades to come. It is just a confirmation of what the downgrades they have done over the past months and years that we have seen. That yes, we are now a selective default country. And so what we need to do is to now go and have thorough discussion with the creditors, the external debt holders, the various categories, the two categories, the multinational, the bilateral countries that we have this debt with, so that once we try to work these things out and build consensus and they agree on this particular one, the country. But you see, there is something that is very difficult for these people to accept. You are asking us to suspend the debt servicing. You are asking us to exchange the debt, but the size of your government is still very high. And if your size of the government is still very high, and you are still incurring some kind of expenditure which you can suspend, like the expenditure on National Cathedral and all those things, it becomes very difficult for these people to accept the proposal that you are bringing to them.
We just have a minute left. I want to ask you a quick reaction on the news that the growth of our economy declined in the third quarter because of slow growth in industry. Your take on this in just a minute, if you can.
Yeah, also as Professor Kote had said, this particular construction that we have was due to the turbulence that we find ourselves in. The cedi depreciation, the kind of oil prices that we have seen. We hope that when we produce more in the country and we have more investment in industry and agriculture, and then there is more export in the country, these things will come down. If it continues to go this way, it will affect the entire economy, and which will not be too good for us.
Sarah Makawa, thank you so much. Senior Finance Lecturer, University of Cape Coast. Again, Merry Christmas if we don't get to speak before the weekend. Now, time for Let's Talk Tech. Joining us, lead for Eyes of Africa, Henry Kobler, Marketplace Tech Pundit. I appreciate your time with us. We're going to do this quickly. You have some interesting predictions for 2023 as far as the tech industry is concerned. But let's first begin with your review of the tech industry in 2022. as it draws to a close. You're muted, Henry.
Thank you. So we've had some very good gains, within the tech industry, some very good innovations coming through, and some good funding also into some of these startups that are actually based in Ghana. And so within the tech and innovative ecosystem, I think that we've made some very good gains. But down to my predictions that really I'm looking into 2023, first of all, I'm actually looking at a very good growth within the agricultural sector, the agri-tech sector. I think that your Professor Kwate was basically talking about agri and how we made some gains in there. Definitely is also going to transmit into the tech industry where you're going to have a lot of technological guys making some good applications to connect to our agricultural sector. And so that's one of the things I will be looking at. Again, I'm also looking at very good growth when it comes down to the cryptocurrency and then the fintech sector. I think that this year we've had very good gains. The A-levy slowed a bit in terms of some of the innovative projects that were coming in, but I'm actually very confident that next year we're going to see a lot more in that. I've seen a lot of companies which are into cryptocurrency also merging up in Ghana. I've actually had to get connected to the Bank of Ghana that's actually released the sandbox. That is also going to help in terms of innovative solutions and regulatory pointers into these innovative sectors that are coming up. One of the things I'm also looking at innovative points is influence marketing. I'm always looking at young people making some good markets, not necessarily having to create e-commerce or jumping onto e-commerce platforms, but using social media as a point of sales. And I'm actually looking forward to 2023. Where a lot more people are going to make a lot more funds using social media to relatively get to be doing a lot more of the sales.
I'm interested in the gig economy. You say it will be one of the leading employment savers.
If you're looking at the unemployment sector globally, I think that we've talked about it where Facebook and other companies are letting go of a lot of tech people. You realize that a lot of people are now home and will be looking at working from home. That becomes the norm where a lot of people are also getting to the soft skill part and are learning soft skills and would be getting some good gigs around. So generally, you're having people working from home being the norm going from 2023 because a lot more people can actually have access to internet, good internet services, and also some parts of that, yeah.
Looking forward to our discussion next week because you've got some more great stuff to share with us. Thank you so much. Merry Christmas to you, Henry. We'll speak sometime next week. And that's the marketplace, everyone. Thanks for watching. There is more news on our website, myjoyonline.com/business. My name is Daryl Kwawu. Thanks for watching.